Happy New Year, everyone, and welcome to the first video for 2022. In today's video, my goal is to focus in on the Russell futures market and try and share what I think the outlook for 2022 is inside of the Russell. Now, for 2021, the Russell really chopped around sideways for much of the year. This is really starting almost Jan 2021. It was towards the end of Jan 2021, and the Russell ended the year very much inside of that same range. The one time we did break outside of it was when we had this blue sign arrow right here, which is our one clue that we thought the Russell would break up. Since then, we've come right back into our market pulse. If you were to think for this a different way, this was your bullish breakout. Now we're getting a pullback opportunity. And this is your new consolidation, trying to get right back inside of this move, trying to play the upside. Now, to me, the con of this overall setup is we don't know how long it's going to take. Considering the Russell has been in this consolidation for close to a year, if you were a buyer of premium or anything of that sort, theta decay becomes a very real concern. So if you're an options trader, to me, the trade that actually makes more sense here is either being a premium seller, something like a put credit spread, looking to try and play this move up and make sure we can hold this new baseline level. Any break below that is our stop, or if the squeeze, of course, fires short. We don't know which of those two will happen, so that's idea number one. Or you can even do something like sell an iron condor really outside of these ranges, looking to try and capture as much of that premium if we continue to do this chop around sideways action, at least as we enter into 2022. So that's off of the weekly time frame. But now for those of you that are day traders, the 1 minute chart I think affords you plenty of opportunities to actually participate and take advantage even though the Russell is chopping around sideways. On that 1 minute time frame chart in the Russell, despite having, if we actually come into a daily time frame, you'll see the candle today doesn't look like it afforded you a lot of opportunities. But on that 1 minute time frame chart, you'll see that despite that candle looking like that, you had a decent amount of volatility in the Russell. Now, the first setup inside of the Russell was a short side setup when price action breached the upper edge of our volatility box clouds right here. Price action breached it. We had the overbought signal, and we hit T1 almost right away before having any sort of an opportunity to actually take advantage of this move. So no trade right here, but this still did work. Now that gives us the confidence to continue to keep looking for more opportunities, more breaches. And the next one came in that 8 to 9 a.m. Pacific hour when price action in the Russell hit our sign entry line. We had the oversold confirmation with this green arrow, and we had an opportunity to enter at our price, our entry price or better, which is the sign entry line. Our risk on this trade was 4.8 points, which is the distance between our sign entry line and the outer edge of our clouds. Our first target is that same 4.8 points on the opposite side, so a little bit below, right around that 2260.7 mark. And our second target is at the gray target line, which is right around 9 points from our entry price. Now on the second contract, our stop is also at break even. So it's a risk-free trade. It's a way to try and see, can we get a home run out of this? Once we entered the trade, again, very similar to the weekly time frame, we still chopped around sideways for a couple hours after that before the Russell finally started to get going. Once we hit T1, the stop was moved up to break even, and our second target, again, was 9 points away, and we're just looking to see, can we tag it or not? In the case of the Russell, we did, and so we had both T1 and T2 hit only on the long side setup, which gave us a plus 9 on that T2, plus 4.8 on the T1, for a plus 13.8 day on the first trading day in the Russell, on a day in which the candle on a daily time frame chart looked like it didn't really give us a lot of opportunities. And that's why I find the intraday charts on the Russell to be the most useful one, at least while the Russell starts to figure out which direction it'd like to break out in. Either it's bullish or bearish. So far it looks bullish, but while that happens, the Russell on the intraday still gives you an opportunity to participate, to take advantage of the volatility, and despite this consolidation, still take advantage of the moves, the intraday moves taking place inside of each one of these candles. So hopefully today's video gives you an idea of how to not only take advantage of that intraday volatility, but also what I'm looking at on this weekly time frame chart as potential signs to try and see if we can get this breakout higher. Again, the Russell has been in this consolidation period for quite some time, but towards the end of the year, we did have our first signal suggesting that, hey, the Russell may start to get going now in 2022 to the upside. Hope this video helps. Take care, everyone. Good luck trading, and we'll see you in the next update.